Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm a managing partner at 40 Capital. We specialize in a very unique set of mathematical calculations that allow us to project the stock market and individual stocks in both time and price. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. Now, our firm's goal is to identify equities that will 2x, 5x, 10x going into the future. So we're basically looking for the next NVIDIA, Apple, Bitcoin, Tesla, Microsoft. And we can do that with the help of our very powerful software that we've developed over the concept of analyzing the market in three-dimensional space and then using our timing indicators on top of that in order to once again project both time and price. So we have the ability to essentially scan the entire S&P 500, for example, and we are looking for stocks that are coming into very important bottoms, and post those bottoms, our calculations indicate that those stocks will surge much higher. Today is a perfect illustration of that. We're going to be talking about United Health Group once again. If you recall, a couple of months ago, we did a video on UNH, and we predicted a major bottom coming in the stock. And as you know, very much aware, that's exactly what happened thus far. So we're going to review that analysis, we're going to see where the bottom has occurred, and we're going to try to determine what happens next. Okay, so this was the analysis that we posted at that time. Let me make this so May 29th, and I believe we did the video. That's when we started our video series. Just around June, I believe we talked about UNH. So if you go into our history and you scan or you search for United Health Group, you should be able to find our description. So basically, as we indicated at that time, as you can see, the stock hasn't crashed yet. We were looking for a very important bottom for the stock in both time and price, and the bottom we indicated was going to be at $225 plus or minus $10. We warned against possibly trying to catch a falling knife, but this was a very good bottom indication, or this was a very good target that we thought, or at least our calculations indicated, that's where the stock is going to bottom. And we projected, I believe, in sometime in June, but I'm sorry, in July, but the stock bottom a little bit later, a couple of weeks later. So definitely within the margin of error. Basically, the point I'm trying to make, actually, let me pull up the chart and we can look at what actually happened on with the stock. Let me see. I'm going to open this and this. So this is the stock over the last couple of weeks or couple of months since about February. So that's where we had this big crash in the stock, and we started publishing our forecasts here. We were indicating at that time that the bottom is not yet in, because the bottom didn't touch any of our mathematical point of force, and we were at that time projecting once again $225 plus or minus $10. It was not a very clear bottom per se. It's not the kind of bottom that we typically enjoy or typically like, but nevertheless, it was a very good outcome from what that projection was. So the actual bottom at 234 was within that margin of error, and ever since then, the stock has been surging. And if you recall, right here, the news came out that Warren Buffett or Berkshire Hathaway were buying the stock and loading up the barrel, so to speak, and that's why we've been seeing outperformance so far. But there's a couple of things to keep in mind before you go out and or you run out and start buying UNH. Now, I'll show you our forecast that indicates much higher prices. As a matter of fact, if our calculations are correct, then UNH is going to a new all-time high, and it's going to happen within a relatively short period of time. But before you go out and start buying UNH, it's a bit late. The stock is already up more than 100 points, but you have to be very much aware of these gaps, including today's gap. And basically what it's suggesting is that the stock is likely to come back and put in some sort of a, maybe not necessarily an all-out double bottom formation, but it's going to come back and attempt to close these particular gaps. And that gives a possible secondary entry point for those who would like to participate in the stock. This is not an advice, but this is definitely something that I would do if I missed this particular bottom on the stock, which was very hard to get into. because it was in a stage of a kind of a falling knife. Everybody was scared and afraid of it. Even though you have an exact projection from service such as ours, it is still psychologically very difficult to take a position at that particular juncture. So if you've missed this particular opportunity, I believe a secondary opportunity to take a position in this particular stock is likely, and it is best served for those who would like to participate in this stock. Once again, not an investment advice, to perhaps wait for some sort of resolution of these particular gaps and then do some sort of a technical entry on the stock. So working out pretty good, as you can see. So yeah, basically our forecast was suggesting that the stock is going to go up at least 200% once the bottom was put in place. There was a stop loss at 214, never had to be triggered. So overall, a wonderful forecast. Let me just show you very quickly what that looked in terms of our cycles, our time cycles, and our clusters. There's too many clusters, but there was one of them at the bottom. But as you can see, very good composition in terms of our cycle composites. Once again, those who are not familiar with our videos, what you're seeing on the chart in front of you, including these clusters that we call cycle clusters, is and the points and the composites is a very simplistic representation of a very complex set of mathematical concepts that calculate the market in three-dimensional space, then use various time variables in order to project what that particular stock is going to do in the future. But for our purposes, once again, the bottom was a perfect hit right here, and then ever since then, now the stock's going to increase first into this particular top, we call it mid-cycle top, and then subsequently into this major top. And by that major top, we anticipate much more significant, or not much more, much greater prices in the stock. And if we do calculate it, once again, this is just a simple representation of very complex mathematical concept. This is yet another representation of three-dimensional calculations. But basically, what our system can do, it can project into the turning point as it did, as you just witnessed. But it is also able to project what the next move is going to be, and that's exactly what it's doing here. So once the bottom is in, which is very, very likely, then we can calculate and say that the top for the next cycle up, as I've just shown, is going to be to at least this range, which is, let's say, approximately $800. But a more likely probability that the stock will see the high of right here. Let's see, what is it? Let's say $950, because in our work in this particular chart, the darker region illustrates the higher probability, mathematical probability, that the top is going to put in place here as opposed to here. But it's going to take some time, as I've just shown on the previous chart. You know, most likely we're going to reach this region by the time the primary cycle reaches its stop, which is going to be in a couple of years. But nevertheless, a return of 200, 300, even possibly 400% since the bottom within a 2 to 3 year period of time is pretty good in my book. So just an illustration how everything works when it works perfectly, I should say. So that's it for today. By the way, UNH is one of our weekly 52. We do updates biannually. So we have 52 mega stocks that we follow. This is one of them. So this was time to do an update anyway, but it was a perfect opportunity to look at the current or existing bottom that we had here, and then what the stock's going to do going into the future. Now we have a webinar coming up. I believe it is September 19th. Yeah, September 19th, Friday. It's only limited to 10 people. One of the benefits of this particular webinar is we're going to be talking about the overall composition of the stock market. We typically shy away from discussing the stock market because that's our bread and butter. But in that particular webinar, not only are we going to share exactly how we calculate the market in three-dimensional space, show you examples, show you how our software works and how it's able to essentially scan the entire S&P 500 and pick out only the stocks that will appreciate significantly going forward. But you'll also get an ability to see our overall market forecast and what the stock market is going to do going forward. With that in mind, we also have a 30-day free trial associated with our service. The service itself is very expensive, but it pays for itself with one stock going forward that performs very well. But if you would be interested in to check it out and see our overall market analysis, see our 52 mega caps, which includes currencies, commodities as well as see our fast movers, I do encourage you to request a 30-day free trial. You can do it on our homepage, and we'll send you login information. No credit card, no strings attached, none of that. So I think you will find it very helpful. That's it for today. Thank you very much for your time. We'll be back with another update tomorrow. I believe we'll be looking at, if I recall correctly, no, I don't recall correctly what we're going to be looking at tomorrow, but one of our 52-week stocks. That's it for today. Thank you very much. Have a wonderful day ahead. Bye-bye.